The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, joined by our man Basil Chapman this morning. Basil, good morning.
Good morning to you. How are you?
I'm doing well. How about you? How is lovely Boston this morning?
Well, it's just beautiful out.
Nice.
Just a beautiful. You want to bottle a day like this and then open it up on a November, December cold day.
Perfect.
Say,
Well, send us some of that sunshine then, because it's raining down in Tampa, Florida, and it has been for about.
Raining?
Yeah, it is. It is. But you know, we can't complain. It's our rainy season. It's warm at least, and we have quite a market here. So we got the Dow up 105, S&P is currently up 14, Nasdaq up 34, and that's after quite a slide to negative territory yesterday. Let's jump over and just see how the VIX is trading this morning. We had the VIX spiking above 18 yesterday. Yeah, 1878, but as the market returns to some positive territory, 1578 so far this morning. So Basil, what are you looking at in this market this morning? Pretty surprising we had such an acceleration to the downside, and then I woke up this morning to see the futures were even higher than we are right now, really.
Well, there are a couple of things going on. For the very short term, on Friday, I had an indication. I have a particular technique that I use called the Chapman Wave Chin Gauge. I actually use Richard Arm's chin. It's called the Short-Term Trading Index. I use that as a benchmark, but I really only look at two numbers on the upside and the downside, and they give me information. And and it has a fabulous record, in fact, of predicting the market within either one day if it's a very low reading, and within 2 days if it's a high reading. And yes, on Friday it did that. It had a very high reading, and it was a meandering day on Friday. And then, of course, the futures opened up huge on Sunday night. And the theory is that there should be a rally in the E-mini futures
Excuse me.
between
Yes.
9 and 11 points up, and that should help the cash index to rally, the S&P and Dow cash index. Well, Monday was closed, but the futures were up. In fact, the futures of the Dow futures were up at one point about 100 and something points. So it fulfilled its promise. I was looking at the charts and I said, wow, this is exactly what I wanted. I've got a leg D. In the Chapman Wave methodology, if I can just show this briefly, this is the technique. We try to identify the most obvious low bar that can start a new turn in the trend. So, and then you look and you count 4 peaks to the upside, alphabetize them out sequentially, A, B, C, and D. When you get to D, other things can happen. That's the rule of thumb. Other things can happen. It could recycle higher, or it could turn around and come down very sharply. And we saw the Dow made a peak D in the daily back on 26th of January at 26,616, and the S&P. So this could be quite potent. What we saw was it was a peak D at 25,086 in the daily chart, right there on the 21st of May, and we've come down. So I was thinking it would be perfect as a very short-term short position, but because we gapped down so sharply yesterday, I just stepped aside from that. What we're looking at now is that the 9-period moving average of 24,653 is very strong resistance, but it's so fascinating because within the market, you've got the Russell 2000, the IWM, making an all-time high today, and it's just actually recycled. And this, I'm going to show my subscribers to my opening call. This is going to be a fascinating pattern because it's what I call a Chapman Wave unconventional flat base instant restart. That's an explanation of the whole technique. So it's a long-winded thing. Basically what it says is that because of this pattern after that peak D, if there is a new high breaking out, when this comes down, it should come down and take out the low that was made, in this case of the 15th, at 158.17, and we're trading at 163.42. We'll see over the coming 2 weeks or so, 3 weeks, if that pans out. So we're looking at a very mixed market. Look at the semiconductors. They're not giving up. Up $1.15 today, acting very well. Yesterday, they were forced down. In fact, they were up all day. forced down at the end. So this is a mixed market, and until I'm starting to get really good signals to say we're going down further, I'm going to stay looking more towards the long side or stepping aside. We were long the Dow, we took profits. Now we're out the Dow, I'm waiting. We might get a short position in the Dow, but I'm suspecting that we will turn around and get a buy signal within a couple of weeks. And the pattern that I'm looking at is this arch pattern that goes from a lowercase h to a lowercase m. We've seen it for months now in the weekly chart. I drew a little template there. So I'm looking for these arch patterns to keep testing lower ranges, try to get to the upper range, stuck in a trading border between, say, 25,200 and 23,500.
Interesting, yeah. You know, it's pretty interesting yesterday how the banks, right, in terms of JP Morgan, Goldman Sachs, Citigroup, Bank of America, no matter where you looked, and it would make sense with the type of fear in terms of Europe and Italy and the debt that maybe Italy is dealing with, but pretty remarkable in terms of the decline. I mean, it was 3 to 4% when I was following it in the afternoon. And like I just pulled up JP Morgan, it's up about 1% today, so clawing back some of those. But pretty remarkable move on the banks when they've been doing okay and hanging tough. But yesterday was quite a reversal.
Well, you know, patterns repeat over and over. And you can see here, JP Morgan, there's this M-shaped pattern. It goes from a lowercase h to yet another arch that makes that M pattern. These things are just repeating. And all I can say is that until the base is tested significantly in this arch formation, I don't think you can get the kind of rally that takes you all the way to back to the top. So that applies to the XLF, the S&P financials, the KRE, although I should mention we are still long the KRE. We have a long position. It's holding way better. Now, that's interesting. The regional banks, the S&P, SPDR, KRE, ETF, is holding much better than the money-centered XLF, the big banks.
Okay,
so
and that would make sense, right? If yesterday's kind of fear had to do with the global crisis that those big players would be influenced by, that maybe some of the regional banks wouldn't have the type of exposure that those bigger banks would have, just fundamentally.
But it also, I think, has to do with the idea that higher rates really helps the banks. I'm not sure that it's just a kind of a Wall Street theory, because I'm sure if you had to back test it, it works and it doesn't work, and when it works, it looks great. And yeah, you can see you had the TLT had a big spike to the upside, so rates should have been coming down. So yesterday's move in the banks kind of contradicted that, because the lower rate should have said, wow, the banks should have been, instead of being down very sharply, like 1.5 or 2%, they should actually have been up. So I just look at the pattern. There's that arch that goes from a lowercase h to a lowercase m in the XLF. And I'm looking at Goldman Sachs. I think later in the year, Goldman's going to really get it together. But until then, it's not the old bank that it used to be. Remember, what did they have? They had a year in which they had like a handful of down sessions. Otherwise, they made money every day. I mean, they don't do that anymore. You can see by the chart. So something's changed.
All right, come on back, folks. We'll figure out what's going on in these markets. Let's check back where we are right now. And we have currently markets kind of hanging where they were. We got the Dow up 148 now. S&P's up 18. NASDAQ up 44. Basil and I will be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, everybody. Tommy O'Brien with Basil Chapman. We get the Dow up 150, about S&P's up 17, NASDAQ up 44. So we have earnings still, Basil. I just want to jump over real quick because some of these numbers, Dick's Sporting Goods. So in the terms of retailers, quite a number, up 20% this morning. And to jump into, I have their numbers. Come on, where are you? Now you're kicking me on butt. I had it up there. Where are you? They had... Okay, it's failing me, unfortunately. Dick's, but then I wanted, so up 20%. They beat somewhat on their earnings per share. Their outlook was better. They had comp sales that were down, but it's all about the outlook as usual. And then also Salesforce. Yeah, Salesforce was a lot higher.
Fascinating one. Salesforce.com. CRM is the symbol.
Yes.
I discussed this. I was a guest speaker at the meeting last night with the Boston Investors Group, and we discussed a lot of things. And we spent a little time on CRM, which is Salesforce.com. I guess a lot of people had it there. So we discussed it. And what I'd say is very, very interesting because, wow, I wonder if I got rid of that chart. Salesforce in January... I eliminated it. I needed the space. So Salesforce in January opened their new tower. It's called the Salesforce Tower.
Okay.
It is $1 billion building in San Francisco, tallest building in San Francisco. And they opened it in January, but officially this past Tuesday was the official open date.
Okay.
So I've got a little notation right here. And made it right there. It was trading at about 127. That was the open. However, this is really interesting. On the 10th of May, it made a round number high in Chapman Wave. That was a PE at 131. Made a little U-turn the next day, kind of consolidating. The following day, it retested the 131 round number high. And then it came down very sharply to 128.09. I say sharply just because of the chart pattern. Certainly a stock trading in the 131 area going down 3 points is not a big deal. However, while I was talking about it last night, someone said, oh, earnings came out. And I said, I showed them a chart of a picture of the building. And I always have the two things that I look at. One is when a company or an institution opens an icon to itself, the biggest, the tallest, the widest, whatever it is.
Sure.
Because that's a moment of hubris in the market very often. What it says is, we are great. And you're patting yourself on the back. And in fact, they deserve to, because it's been one of the great companies, cloud computing. I mean, this guy Benioff, he's done everything right. And I always say, okay, let's just see if this is some kind of at least a short-term top. So someone said, oh, it's earnings, and they're up 3 or 4 points. I said, oh, well, that'll take out the previous high, the all-time high, the 131. What does it do today? It gaps up. It goes to, now, of course, the day's young. We're not even an hour into the session, but Definitely. It gaps up, and it goes to 132.55. It's trading out 128.86, below the 131 number, and it's at the low of the day. I'm watching this real closely. Just as I mentioned about 4 stocks that I consider kind of bellwethers for me, the economy. This is CRM is one of them. CTAS is Cintas. They do uniforms and overalls. So there are a few companies I look at and I say, if they're doing well, generally the market and the economy are doing well. When they start to stall, I have to look at that very closely. So for me, this is now probably a leg, what I call a rogue wave, spike to the upside, maybe a peak F if it pulls back sharply from here. But I can just tell you that if Salesforce actually starts to trade under 128 sometime next week, that's going to say, or before then, that's going to say to me, be careful. You've got at least a short-term top in one of the great companies, and so market-wise, that might impact the market. So I'm watching this really closely, and you can see this pattern here with the 2 parallel lines. It's a channel in the Chapman Wave methodology. If you break above, you can go 1-to-1 to the upside. We pretty much did that. If it comes back into the body of 126, you've got to be real careful, because that could start to pull. 128. That's going to be where we are right now. How it handles this is going to be very important. I just thought I mentioned that because it had the icon of the newest, tallest building in San Francisco, plus the round numbers that we saw twice. We'll just see if technically that's just a little bit overbought. Now it's going to take a digestive phase.
Definitely, and they are a juggernaut, like you talk about. And just Absolutely. I was just Googling to pull up their exact numbers, and it's interesting. So one of the articles, if you see, I have the chart up, Basil, Salesforce stock climbs as earnings yearly outlook top street views, but guess what picture they have? Of course they do. They have a picture of their Salesforce tower in San Francisco.
Oh, they did?
Right there.
There you are, you see. Okay. So we'll just see. I mean, this is one of those things that I like to put together, the socioeconomic, political aspects,
Yes.
all these different things. But absolutely, they're the 21st century. It's like General Electric and General Motors of the 1920s. Yeah, this is very much like that. It's just it's created an industry, and it's the leader of the industry. In many ways, and it's a juggernaut, as you say.
The numbers they have, I mean, just to give it a quick overview, so they had a first quarter net income of $344 million, or 46 cents a share. They had revenue of over $3 billion just in 90 days.
$3 billion.
$3 billion.
Yeah.
That's quite a number. That'll pay for a lot of big buildings for sure.
Well, what's interesting is it's $3 billion, but there's not an item. It's a service.
Yes.
So this is very. I mean, it's really the service industry is really huge in our economy. It's one of the reasons why I think we haven't seen the kind of normal growth that we usually see, because it's part of it is in non-durable goods. Let's call it that, because
sure, no, right. It's a service industry completely. I mean, they have the cloud computing 1,000,000%, and they are providing that service, and that service is their good, right? I mean, that's what it bottles down to, for sure.
Yeah.
Pretty remarkable. So, how about
what are you looking at? I was going to ask you what is on your mind.
Well, you know, the oil market was pretty intriguing last week. Now we don't get the inventory numbers until tomorrow, I believe, because of the Monday holiday. But pretty remarkable run for oil, down from above $72 to approaching 66 even in the overnight session. We were at, where was 66.40? No, 66. We got there yesterday. Yeah, at under noon. At noon, we traded down to under 66. So that's a market that, you know, volatility-wise is just all over the place as it tries to find, you know, where is it acceptable for oil to be over $70 right now? Well, if OPEC and Russia begin to cut, that might not be the case, as we saw last week with that, you know, steep acceleration to the downside. But with that said, from $66 yesterday at noon, not even 24 hours later, we're $1.40 higher, trading at $67.40 already this morning. Gas prices are high, right? We just came off the long weekend. Everybody is kind of in the same boat now that you're aware. Gas prices are high. And then, of course, you have the Aramco IPO looming in the next, whether it's year or what it is, as they try and keep those oil prices high.
A year is a very, very, very long time. A week is a long time.
No, it is. And it might even be longer than a year, right? I mean, it seems like that got pushed back once. But interesting nonetheless, for sure. All right, folks, come on back. Basil and I will be back in 3 minutes.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien with Basil Chapman. We get the markets hanging, kind of. Dow right now currently, come on, cooperate, up 143. S&P's up 18. Nasdaq up 42. Yeah, so, you know, I'll be looking to that number tomorrow, Basil, for the oil inventories. It'd be interesting to see where that shakes out. Gold's had a little bit of volatility. Interesting to see that in light of yesterday's action, gold did get a bid, but nothing too substantial in terms of, you know, some fear, economic fear in terms of debt crisis in Europe, and gold just kind of hanging at 13.05.
So if we put the two together, the dollar and gold, it'll be very interesting. Let me just quickly go back to the crude oil. The crude oil made a peak D in the Chapman wave on in the daily chart. It made a peak D in the 120-minute chart right here. This is right here. This is on the 22nd. And it's made a leg D, and by Friday, if there's no new high, this will become a peak D in the weekly chart, and it's leg D in the monthly chart. So it's going to be interesting for me to see, is there going to be a push above the high that was made of 72.19, the continuous contract? How high will it go above that when this 200-period moving average in the weekly chart right here at 67, right where we are, in fact, 67.40, that's like a magnet now. It's saying that, yeah, we could go down, but we're probably going to come back and test that 200-period moving average. Oh, we could go up, but we're probably going to come back and test, because that's the power of this moving average. You could ignore it for what was it? Let me just go back to the last time that the last time it was there. Yep, it was back in October. If I can stop this chart from sliding, back in October of 2014. Well, slow down. Yeah, that was the last time that it was at the 200-period moving average. It broke under it. Try to hug it because it's like a magnet. In fact, look how long it was playing like a sine wave above and below that 200-period moving average. Once it broke away, it never looked back. But once it gets back and gets close, in fact, you've got to consider that that's like a magnet. I'm not sure why it works like that, because it's 200 period of whatever you're looking at. So there's 200 weeks.
That's what I was waiting to say it, right? We're 200 period, and when each period is a week, right? And we were at those big 100+ numbers in oil for so long. Pretty remarkable it's taken that long to get to it.
That says that it should hang around the 67s, up or down, maybe 2 points or 3 points for a little while longer. That's the way I'm looking at it. Now I can go back to and talk about the dollar. Look at the way the dollar has rallied. Today it's down 46 cents, but look what it's done. Here's the 200-period moving average of the daily. It went way above it. It went to this left side. If you look at the cup formation in the weekly chart of the dollar, the 94.22 was the area that it was in 2017. Then it broke down and went to 88.26, the low of the week of the 16th of February. Now it's made the cup formation. It's only in leg C in a buy mode, and that means it should go higher in the longer term. And you've broken a downtrend line. You've got this left side, right side price time match that it broke 2 weeks early to the upside. The 94.22 to 95.15 area is very strong resistance. I'm anticipating that the dollar takes a bit of a breather. And if you look at the EUR, I'm getting to your statement in a moment. It's a circuitous way.
No, the dollar matters for sure. Please,
if we look at it in conjunction with like the chessboard, and you want to look at all the different components, the euro dollar is trying to rally, but just as the dollar hasn't broken down yet, it's just had a slightly weaker session so far today. So the euro is, the stochastic is trying to turn around, but very very oversold area, 6.55 right now. The MACD is trying to turn, but the histogram is starting to improve. So I would not be surprised. Now I'm going to give you the dollar because the gold, because gold is trying its very best to stay within the border of the support of 12.95 and to break above the 13.18, 13.19 area. That this consolidation phase right now, with improving technicals in the daily, is being kind of beaten down by the weak technicals in the weekly chart, and the monthly chart is holding okay. It's holding this long-term trend line. So I'm going to make it for subscribers. I've made it very clear. We actually are holding the GDX, which is the gold miners, as a long, almost as if it's an insurance policy to our long dollar, which we've been along since 90, and it's now in the 94, 95 area. So as insurance, we've got the GDX. But until I see gold actually trading in the 1320, above the 200-period moving average in the daily, really pushing strongly with the technicals confirming, together with silver. You know how many times I listen to Tom and he talks about gold and he'll say, yep, the gold's looking good. And then he goes to the silver and silver's not quite as good. Then he looks at silver and says, whoa, silver's had a really good move. And then he looks at gold. They're not working in sync.
Definitely. It is intriguing. Yeah.
Yeah, it disparately. And until I can see gold and silver move strongly, silver would have to get to the 1690s really. It's a 16.45. That sounds like no big deal. But look, it's been stuck in this range for weeks. So until you can get rid of all this downward pressure to allow, like a cork in water, you want this to pop to the upside. I think gold and silver are kind of stuck for now. And the dollar is really the king at this point. And Tom always says king dollar. I think it is king dollar.
It is lately, that's for sure.
Well, I think it's a bit of a surprise to a lot of people because there must have been a lot of bears. And I kept hearing about the dollar. It could bounce, but it's going to be going lower. But if you look at the chart, this is really good. Look, the technicals are confirming. MACD's just flat. When it's flat in the 93% area, that is just saying there's buying and cushion strength. And I like it, I must say.
So, Basil, you talked about your subscribers a little bit in there. I know we were chatting yesterday, so we don't have it up on the front page of the website yet, but your subscribers, I know you have a little bit of a vacation coming up next week, but then is it June 14th you're going to be doing a workshop, I believe?
Thursday, June the 15th.
15th, okay. And what are you going to be...
I'm talking to you without the calendar in front.
No, you know what? I know that Thursday is the 14th, so maybe it is the 14th of June.
Well, I'm just guessing that if Wednesday is the 14th and it's the day before the webinar, I'm just going to guess that Thursday is the 15th, is the day of the webinar.
I got a calendar, June 14th. I believe that's going to be the date that you're going to be doing it. But tell, what are you going to be talking about? Because, you know, people should give your newsletter the opening call a try anyway. They can get in there right now. They'll have access to the webinar that's taking place in the middle of next month. And what are you going to be talking about for your subscribers?
I'm going to be talking about under the radar stocks, groups. I'm going to be talking about the semiconductors, and it's a little ironic because at this particular point we are still long the SMHs, the semiconductors via the SOXL, which is 3 times long. We've taken off some positions, still got a core position, and I'm looking at the semis when they finally run out of strength. They've had such a spectacular move. I'm going to discuss how and which stocks within the group could be vulnerable over a period of time, and that we've got to expect that there are going to be new winners coming up in the second half of the year, and I want to be looking at that. So sector rotation, what should work and what probably won't work, and what I'm really looking at for subscribers. So we've already started trying to position ourselves for that.
Perfect. Well, come on over, folks, to the front page TFNN. Click on newsletters, trading newsletters, the opening call. Check it out. Basil and I'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Basil Chapman with Tommy O'Brien. We got the Dow up 137, S&P's hanging up 19, NASDAQ up 51. So, Basil, do you look at Bitcoin at all in your charting?
There are a couple of things that I do. There's the GBTC, which is the fund.
Yes.
Now, the fund, people have to realize that if you're dealing with the fund, you can only trade it between 9:30 and 4 o'clock every day, and every market day.
And is that the one, Basil, that had been dealing with the premiums that were in there, I believe, right?
That's the one
where things got a little
spoke about.
Yeah.
And I think with 30 or 40, I think, what was it, some crazy number.
I believe, I mean, it was trading at like 80, 90% premium versus the net asset value. And I see your chart up there now, and I believe that's on all those higher peaks, whether it's the D, the F. When that thing really got going, and that's kind of the shame when it did that, is that it had a premium to the net asset value that was almost unsustainable. And you can see the, along with Bitcoin pulling back dramatically from that level as well, that was a problem in that GBTC, yeah.
So let me just do a couple of things here. In the Bitcoin Investment Trust, it is very difficult emotionally to be trading something that trades...
Sorry, Basil, I'm dealing with a little bit of a summer cold as I cough. Go for it, please.
It's all right. To be trading something that trades overnight it used to be the kind of numbers that you would see in some stocks over a week or a month, and that will be overnight. And the next day, I mean, you wake up and you could be down 2,000 points or 3,000 points or up 3,000.
Yes.
This is very, so my subscribers, actually quite a few subscribers said, could I put it on my newsletter? And I said, you know what? This is so unreliable. The risk is so great. I would prefer that if you just ask me the question, I'll answer the question, but rather than have it as an official trading vehicle, I just couldn't do that. And it made a peak deep top in the Chapman wave. Right there, that was the high. Most recent high was in February the 20th. It went to 20.40, gaps down, makes an item reversal, plummets down to the 10. I would call 20 to 10 about a 50% decline. So that's not very good. And then it bounces back up to 17. So you're looking great because you're still holding the thing. You think, great. As soon as it gets to 20, I'll make a decision. Never gave you a chance. It comes all the way back down to the 12, 15 level. No, this is terrible. And the peak D in the weekly and the leg F, peak F in the 38.71. And I discussed this on the show the very first week of January. I said I was at a party at a neighbor's, and the neighbor said, I had missed all the high techs, I just didn't understand them. By the time I finally got in, they'd already, I am not missing Bitcoin, I am in. And this was January the 1st. And I said, you know, I'm looking at the chart. I didn't tell you what I did, anything. I just, you know, it's a little difficult right now to be getting in. Everyone's talking about it. And then over on CNBC, whenever you heard anyone talking about Bitcoin, the number 40,000 or 50,000 or 60,000, just in every conversation. And I was saying to myself, no, that's not going to work. So then what happens? It dropped. Remember, it went down to the round number 6,000.
Yes.
It might have faded a tad below.
I do.
So if you look at Bitcoin, I think it's a lot of work and a lot of competition. When you get one, they have hundreds and hundreds. Actually, I think it's over 1,000 now. Different vehicles in that sector. I think that, and legislation, all sorts of things coming up. Look, here's the candle for today, and this is Bitcoin Live right now, I believe, trading at 74.40. I think that the pattern that we looked at, the arch formation that goes to a lowercase m is applicable here as well. Look, there it is. There's the arch formation. I drew this in a long time ago. Here's another little arch. It looks just like, keep your eye on the weekly chart right here. Now look at this. Have a look at this chart right here. Oops, and I'm there. The pattern that I drew at the top, you see in the Dow. So patterns repeat regardless of what vehicles you're trading. It's a funny thing in the market because what's the Dow got to do with Bitcoin? Nothing. And yet look at the pattern. It made that top in January, just like Bitcoin did in late December, early January, and then it pulled back. So patterns repeat. So I think that there's a lot of work to be done. There should be a good rally in Bitcoin at some point, but I'm not sure about this year being the 40,000, 60,000, whatever it is. You know, those numbers, you can do whatever you want. That is, to get back to the bubble that it had takes a long time. And that's really what I'm looking at. So to answer your question, I do follow it, but I refrain from giving advice on it because it's just such a risk taker.
You make a lot of good points for sure. So I had pulled up, I was curious myself. We haven't looked at that GBTC, Tom and I, that often since it was really going gangbusters. And so I just Googled literally GBTC net asset value, and it did bring me right over the first one to Bloomberg. And what's intriguing here is that even right now, it is trading at a 67% premium. The net asset value on that is only $7.27. So at some point, that should navigate back to the mean of their net asset value. So just buyer beware, let alone the variance you're dealing with in cryptocurrencies itself. Dealing with GBTC, a trust that is trading so far above the net asset value, that's quite a gamble situation.
Can I just put it into some kind of perspective? Because what you're saying is that this particular vehicle, you're not talking about Bitcoin.
No,
you're
correct.
talking about this vehicle as an instrument.
Correct.
The mathematical part, the intrinsic makeup just does not fit
and that's
the risk-reward parameters one would want.
And that's where you see, I mean, I can understand where people want to trade Bitcoin in a regulated environment, right? And so that's probably why there's a premium for the ability to get in on the bandwagon like you're talking about, get in on it where you can just buy it through your brokerage account potentially. But I would just buyer beware, because as things start to accelerate volatility-wise, you may see that either spike higher because those numbers were much higher in terms of above the net asset value, but guess what? They can come crumbling back just as quickly. For sure. So that's an important number. If I was in that, I would keep an eye on that net asset value pretty meticulously if I was an owner.
I'm not saying people should not even use it as a trading vehicle, but keep it in mind it should be a small part of your portfolio.
Sure.
And you can't even put a stop in, because if something happens to it, like the VIX index, remember there was the VIX. No, it was the X. What was it?
Was it the XIV? Or,
the XIV,
is that what it is?
XIV, which is the inverse of the VIX index.
Yes.
So you got your TVIX, you got your VXX. Those are vehicles that people trade every day. But the XIV was supposed to do the same thing, but the whole mathematical formula was just completely wrong, and it stopped trading. It meant that people had it, I think it was like, I can't remember the price, 69 or 80 So that, I don't know what happened to what happens to that money. I'm not even sure.
No, it's quite a game when you play that in terms of understanding your risks, at least, right? You know, I mean, we're all taking calculated risks, but you just want to understand those risks, and that is one of those risks. Talking about 727 for sure. The one thing I do like about Bitcoin is you got a market at least in both directions now. You know, when people were talking about buying it when it was at 20,000, that's just, I mean, just one way up. At least now we've had some direction in both directions, so maybe it is.
And there's a little history, right?
That's
now
right.
Some history.
We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Tommy O'Brien with Basil Chapman. We got the Dow up 203 points now as we get an acceleration to the upside. S&P's up 24, NASDAQ up 57. S&P's up almost a full %, Basil. Pretty intriguing. Buy the dip. We're back to buy the dip. Yesterday is forgotten. Today is here. Pretty intriguing. I was listening to Bloomberg on my way in this morning, and they were talking about as fears over the European debt crisis subside. And it's like, well, how do they subside? What happened in the last 24 hours? Did I miss why that fear is now gone that was here yesterday?
No, they meant that we are subsiding our discussion of it. That's
very true, exactly. Right? I mean, it was just intriguing as I heard him. And it was, true, as in, obviously, I mean, we got the Dow up reclaiming almost half the losses already, and it's not even 11 a.m. yet. So it'll be interesting to see where this day accelerates, for sure.
A couple of things that we can look at. Look at the, what is that, an 11% decline in the VIX index. So The reason why I've not yet had subscribers go to the short side, and normally I get the peak Ds in the Dow, I'm writing for the short side, is because the strength in different sectors are the sectors that are telling me there's, you know, you think of the scales of justice, so you've got maybe a few stocks that are holding very well while the others are weak. And as long as you've got that balance, it means that you've got some support. If everything was going down at the same time, I'd say, uh-oh. But you've got IBB's gone to a leg D in the daily chart, up $1.64. That's the Nasdaq Biotech ETF. I like that. It means there's a rotation into a different sector. As I say, the semiconductors is up. They're up 1% today. That I like that kind of rotation. It means that you don't have to have a blanket opinion. You can identify what you like and trade it.
And you almost have Amazon at an all-time high. I think $10 away from its all-time high today, pre-market at least, to 16.
What a company.
What a company.
Wow.
Basil, thanks so much for joining me. I know you have your program coming at 12, and you're going to do an hour for Tom as well. So I'll be looking forward to it. Have a great day, man. Thanks so much, folks. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.